It's time for Charting Futures, where we dive into the futures markets through the charts. And of course, it's Friday. Happy Friday to all of you. So let's review the market action this week and take a look at a trade idea for the weeks ahead. Now, it was a bit of a bumpy week, of course, with that Facebook fallout from last week affecting the beginning of the week. But net, take a look at the NASDAQ 100 of 1.2% on the week. Its first up week in three, really being helped out by Apple. Take a look at that, up 8.8% on the week, of course, hitting that $1 trillion market cap status. Now, moments ago or minutes ago, the 10-year yield had actually been higher on the week, telling us that it was confirming that risk-on picture for stocks and the Bloomberg dollar index up about 0.3% on the week. So overall, this does look pretty risk-on. Let's dig into the 10-year yield longer term, though, to see whether or not it suggests that this risk-on picture we've had might stay. So this is a long-term chart of the 10-year yield. This shows us the great bond bull market, this descending trend channel here. Of course, price trades inverse to yield. What I'd like to point out, though, as has happened so many times over the last few decades, we once again have the 10-year yield pushing up toward that resistance. It looks rather heavy. I'm looking at other charts suggesting that the entire area of congestion we've seen this year might just drop back down to 2.5%. If that happened in the context of a Fed that's raising rates, it would suggest that there's a haven bid out there. Lots of ifs there. So I'd like to bring in Joe Perry of ForexAnalytix. And Joe, on the day even, take a look at this. We have stocks rallying, but we have bonds rallying, we have the yen rallying, we have gold rallying. So investors seem a little bit confused. You think we're going toward risk off, or are we staying risk on?
I think we're going to continue with the risk on.
Okay.
Think about what happened this week, because we had three central banks come out. Two of them were dovish. One of them, being the Fed, told us exactly what we wanted to hear. We had the FANG earnings come out earlier. Even though it sold off, stocks were brought back up. We had China's tariffs come out today. We're sitting here right around unchanged. So I think that there's going to be a risk on continuing. We may see some pullback in the next couple weeks or so, slow markets in the summer, and then it's ultimately going to continue bid.
Okay, so your area of expertise is really trading Forex. So it's kind of interesting for me to hear you say risk on, because if we take a look at your Euro chart, which I think of as a growthier currency pair, this looks kind of bearish. I love this chart. Talk to us about it.
Well, let's talk about that. The dollar is bid pretty much for one reason, and that is because of the tariffs that the U.S. has put on. The PBOC has been devaluing the currency, making the dollar go bid. So that's why dollar is going mid, and that's why euros are going to come off right here. You can see back here, starting in the end of 2016, the beginning of 2017, we started to go bid all the way up into April of this year. We went up all the way to 125. And then right around April of this year, you could see that we had a very sharp correction. That correction is actually about halfway back. So it took 15 months pretty much to go up. We gave back in about a month and a half.
And what about that area of congestion over there?
Okay, so that area of congestion, actually, that's about halfway back between this low right there. So it's a natural place for a pause. And you can see right down here that the RSI was oversold. So it needed to unwind a little bit. And now it's in a pennant formation, and it's just below the 50-day moving average.
So your trade is to the downside?
Yes, exactly. So if you look at the high that we have back in April down to the low that we have there in June, there would be an extension from there that if you take that and you add it to the end of the triangle, that kind of gives you your target level. Okay. So if you did a short right here at 117.30, you could put a stop above 118.5, and you could target all the way down actually to 108, which would be this gap right here.
That would be a pretty significant move. I would have to think that's risk off, but we'll have to save that conversation for another time. Joe Perry, ForexAnalytix, thank you so much for joining Charting Futures.